Hello, my name is Matthew Blazewicz, and I am the designer and programmer of the Wildcatter simulation, which is a business simulation of an upstream energy company. In the simulation, the user becomes the CEO of an upstream energy firm and makes decisions regarding what projects to pursue in the attempt to turn a profit and generate revenues from producing oil and gas. So the first thing I'm going to do is click on the New Simulation button from the main menu, which brings you to the New Simulation screen, wherein the user can select a firm name, a customized firm name and stock ticker symbol, as well as a paint scheme. I'm going to click Begin Simulation. And each time you begin the simulation, a randomly generated world is created and populated with natural gas and oil deposits. To get a good overview of the world, one can bring up the mini-map by pressing the space bar. Here on the mini-map, one can see that there is an assortment of continents, climates, and different geographical features in the simulation world. Also in the world are randomly placed cities. These cities have names from the real world, but other than that, they are not geographically located in any realistic manner. They are also randomly placed. As I mentioned before, the simulation firm has to create a series of projects, either exploration, development, or production, in order to build a profitable energy portfolio. So we're going to begin by the first step, creating an exploration project. I've right-clicked on a tile that I want to explore, and now I'm going to select New Project, Exploration. This brings up the New Exploration Project window. From here we can name our project. I'm just going to leave the default here, and I'm going to set the resource, skill level, and equipment quality to 5, which is the maximum. And you can see that as we change these numbers, it changes the cash outflows here on the right. These are projected cash outflows. I'm going to leave the equipment quality at 5, and I'm going to select to own the equipment. Leasing or owning the exploration equipment affects how the tax shield can benefit the project. It's worthwhile to conduct a discounted cash flow analysis of each of the flows for either leasing or owning, and then discounting them at the after-tax cost of debt to determine which method is best for the expectation of the project's life. So for this project, I'm going to select Own, and I'm going to center the map on the project. And you can see right there wherever that square is where the project is going to begin. Once I click the Begin Project button, I'm going to click that now, and that creates the project. You'll notice in the title bar, the cash is set to $100 million, which is the starting cash for the firm. However, after creating this project, no cash outflows occurred, and that's because all outflows don't occur until outflows occur at the end of the term. Once each turn is a quarter, and once the turn is ended, the projects conduct their operations and expense their costs. To be successful, multiple exploration projects are normally required, so I will create a slew of exploration projects. Exploration projects initially have about a 10% probability of finding an existing deposit. So if the simulation, when it randomly generated the world, put a deposit under one of these seismic trucks, which mark my project locations, if the simulation has a deposit underneath one of these trucks, the truck has approximately 10% chance to find it. Now these seismic trucks are just markers. They're not actually representative of the firm's technology. Obviously, since the year of the simulation is 1859, there were no seismic trucks available. They're just simply markers to mark the locations of the project. And when they're animating, that means they are active. When they are not animating, that means they're inactive. Inactive projects for exploration have obviously cheaper operations. The only thing that a person or a firm pays when a project is inactive is consignment fees, and those are just fees that are paid to maintain a claim to the land. All right, I'm going to create one more project. All right, so for all these projects, you can see the different cash flows. We've got consignment fees that are going to be an outflow. We have wages and the depreciation tax benefit, and then of course the asset purchase initial outflow if we're going to own the project. The consignment fees are contingent on the are a function of the distance of the project from a city. So the farther away from the city a project is, the cheaper the consignment fee. Alright, right now, since I have projects created, I'm going to end the turn, which is going to end the quarter. So I right click and select end turn. And at the end of each quarter, a series of messages will appear. Right here we can see that there is a conflict in gas producing regions, which has caused a significant supply shortage. And this is simulating geopolitical unrest. And the simulation will randomly have such events, which in turn causes supply shock to the oil pricing mechanisms that run in the background. So if there's a conflict, there's going to be a supply shortage, which according to the laws of supply and demand could possibly raise the price of oil, ceteris paribus. And the other messages that will come up are the messages from your project manager. So we have 8 projects, none of which unfortunately found any evidence of deposits. And over here we have the consolidated financial statements generated every quarter. You can see that on the balance sheet we have $687,500 of exploration equipment, and that represents the net asset value, so the book value of those assets. If we were to liquidate those projects, that is the money that we would receive as an inflow. We have the income statement. The income statement is reporting that we have a net loss. And that is due to the fact we have 0 revenues because we are not producing any oil or gas for the market right now. And I also have the cash flow statement, and this shows the change in cash. We started out at 100 million, and now we subtract this number to come up with the current cash that's in the title bar. You can see now that the quarter has changed. Previously it was quarter 1, now we're in quarter 2 of 1859. That concludes this video. In the next video, I'm going to show how a development project is created.